But no, you are not around. When was that? It means today you were here when we were explaining permanent establishment. And we explained Ghanaian permanent establishment and foreign permanent. You remember? Okay, so explain Ghanaian permanent establishment. Matthew was not around. Ruth was not around. So I want you to explain. And I told you, I asked you that you should go because when they come, you are the one going to tell us what we have discussed. Mrs. Rescue me. Rescue me. What did you say? What did you say about it? Or you were here. Just starting in Yadi. Ghanaian permanent establishment and foreign permanent establishment was not on Monday. Sure. It's a very good
permanent establishment is where what's that? A foreign carries out its business activity. When we talk about foreign permanent,
she's listening. Matthew, please. Oh, Matthew, are you know?
I'm listening.
That's a Ghanaian permanent establishment. Now, when we talk about it,
now someone can request that. Say, yes, yeah, continue. You must spell out short.
a permanent establishment is a place where a foreigner carries out, or a resident carries out his business activities.
What do you say about the tax consequences or implications of permanent establishment? I am not responsible for I am not.
The activities it does. So undertake installation now. The installation and then the business activities itself. They are all done within the
And then what again? So what did you say about the tax? So what can I say in living can only make on ship? Because the more we are saying it, the more you are also saying it, the more you are able to remember and remember it fast. We did the tax implication and we said that they are taxed as what? As an entity that is resident. And we said that if you are a resident entity, we tax you at the general CIT source. And after the 25%, because you are a non-resident and you are repatriating your profit, what will happen? We charge you
8%.
another 8% and call it as what?
Repatriation tax.
Repatriation profit tax or branch profit tax. Okay, so when you compute your 25%, you deduct it from the profits on which you calculated that 25%.
Okay.
What will be left? That is what is expected to be shipped overseas, and therefore that will also be subjected to 8% branch profit. We went on to say that it can happen that there are some transactions that the individuals in the country will have or are basically reserved for individuals. And then we said that if you are a non-resident and you want to also establish a business in Ghana, then we are looking at certain requirements that you will have to meet. You remember we talked about that minimum requirements that was what did we say? Yeah, Charlie, you were moving.
Except for the minimum requirements, the foreigner or non-resident wants to adapt to the trading business, then they will have to come in with capital or goods worth $1 million, and they will have to employ 20 skilled Ghanaians. And then if they are coming in as a joint, like to do a joint venture with the Ghanaian, they will have to come in with $200,000, where the Ghanaian citizen is supposed to have a minimum of 10%. And then if they are coming in as a sole business, then they will have to bring in $500,000.
I think that one is where we head between James and Charlie.
It's on the channel.
The other time, James mentioned
I had to have sold to me. When we finish with the benefit.
James mentioned it, and then today Charlie has also given us a very detailed one.
One of our problems.
We'll take that. Okay. I'm trying to put the GLBC Act on the page, but my push is not going to going forward, we ended this day, even though there were other discussions that were hello. Other discussions. So I'll put that on the page. Now there are some exceptions to that rule. Okay. That it means that the ones that you are usually asked in examination, the commonest one, which is the activities that are reserved for Ghanaian, the minimum requirements, the Ghanaian permanent establishment, these are the common ones that have been coming in examination. Okay. The uncommon ones are the ones that I think I have to draw attention to, so I decided that we will talk about that one, which is the exception to this rule that we just mentioned, the exception to the minimum requirements. When you go on the page, it's there. I'm reading from the page. When you go to section 20, I think 28 or so. Okay, 28 talks about the minimum requirements. And just as you are ending the minimum requirement, you have the one that does not apply. These are the exceptions to the rule that we just mentioned. Exception. Okay. Exception. It means that the minimum requirement that we have talked about, you can have somebody or a foreigner without that capacity, but will be satisfying this condition. And it says that if you have a spouse, when you read the subsection 5, section 28, subsection 5, that is, the minimum foreign requirements of this section shall not apply to the following. It shall not apply to the following. It says that, where is it? Okay. So the minimum foreign capital requirement of this section shall not apply to the foreign spouse of a citizen of Ghana to the extent that, so we are talking about a foreign spouse. How do we describe a foreign spouse? Foreign spouse, whatever.
Like to marry somebody who is not a citizen.
Basically that. Somebody who is not a citizen. To the extent that the foreign spouse is or has been married to a citizen of Ghana for a minimum period of 5 years continuously. So it means that if you marry a foreign person like Jenny for continuously 5 years, or holds an indefinite resident permit prior to registration of an enterprise. Okay, that foreign spouse is holding an indefinite resident permit prior to registration of what? The enterprise. Please, do you get it? So you are married to a foreign spouse for continuously what? 5 years. Or if that foreign spouse is already having a what? A resident permit, okay, to registration of an enterprise, then that one is what? It's an exception. It means that when you are entering into partnership with that person, or you are establishing a business with that person, you do not need to have this $200,000 that we are talking about. $200,000 that we are talking about. Please, do you understand? Hello. And then B, the marriage has been duly verified as having been validly conducted. It means that the registrar has agreed that yes, this marriage has taken place in a country. Okay, and these people are actually married. And C, the foreign spouse is ordinarily resident in what? In Ghana. It means that the person has over the years been situated in Ghana and going up and now doing his or her business in Ghana already. Okay, that means that when you are married to such a person, you are not expected to have that minimum requirement that we mentioned earlier. Please, do you understand? Which is an exception that is likely to pop up in examination. Is that okay? Then when you come to the sixth, a citizen of Ghana who loses the citizenship by reason of the assumption of citizenship of another country. Okay, we are talking about a Ghanaian who has somehow naturalized for another country. Please, do you understand? Hello. We are talking about a Ghanaian. You are a Ghanaian, and now you have taken another nationality. Okay. Because you know you already, this principle too will not what? Will not be required.
Even though you've lost your savings.
Yes. We know you already. We have your details already. Now for that can actually if we want to find where you are or where you were, we'll be able to trace you back. So that one.
It is what's the mama into the main MP.
Only MP, no,
MP don't need in relation to elections and residents. Investments. For sure, investments. Upon ever for that day business will happen. May ever you are to you trace source on the area. Man, so you promote how before to my business will happen. But that's it is a infection. You could even see I say you. Because of the way to connection, it is a lesson. Tell me you are not investment or yet. There's a for $200,000 family and offer $200,000 a family and $500,000 a family and sana about a business. Okay. Or when you can move for pay, I'm not from Nigeria. Now, we start Nigeria. Okay. Then when you come to the section 29, the minimum capital requirements specified in section. You can actually show. Me more on your soft copy book no man and carry you. Na ko exams afi na ko hwe. Mal kan electron book no second home. Why they underline. The minimum capital requirement specified in section 20 does not apply to A. Portfolio investments. I'm using sections. It's on section 29. And page 12. The minimum capital requirement specified above does not apply to A portfolio investment, and B, enterprise set up solely for export trading and manufacturing. Export trading and manufacturing. And we are saying that export trading includes export of goods or produce that originate from what? From where? Ghana. Okay, the definition is Shasa. Or never remember
So does that mean that if you need the person is foreign, they set up a business, and then the business is set up solely for exports and with the minimum requirement?
Yes, export trade. It means that you produce and you do an exchange. Then manufacture.
Section 28, subsection 1A. In the case of a joint enterprise, with their partner who is a citizen, invest a foreign capital of not less than not less than $200,000 in cash or capital base. So subsection 1, subsection 2. A person who is not a citizen may engage in trading enterprise. Okay, I now understand. I have read myself. But no money. But no, I have one, we have two.
One or two, I have one king. No, Madame Ken, but I saw one. Still, entirely one can you all in a king.
No, but then
okay,
need like exceptions.
They more one of my show. Source. Next time in here. Okay, so that is very, very key. Now, this GIPC Act is an important act that is relevant to our exam. So if you have the opportunity, you can go through it. But they do our own here now type of you can also go through the labor requirements and the automatic expatriate quotas. Then you can also read on activities, section 27, activities reserved for Ghanaians and Ghanaian-owned enterprises. This is the one I'm saying that it has come in exams multiple times. Okay, you see. Well, it can still come. It can still come. So when you are reading, you read on those. When I asked you to go and read on GIPC, these are areas that I was expecting that you go and read on.
So the situation where foreigners engage in these activities that they are not supposed, is there any penalty or something like that?
Okay, so when before you reach the bottom, you see the penalties there. Okay.
The penalty is like,
Masa, every exam so men come for you when you do not know you. Men control at the beginning. Masa, in your fin, you challenge you. A pair pass and you are not for more one brain, control for someone. Example, we are not fighting political will and political malfeasance in our examinations. No. Watch out.
thank you, sir.
Actually, next question now. All I know, I offer phone into whom I chose a better. Remember that you are still battling against time. That's one question if you did. What all I am actual one. You want to write everything that you have learned in the class, everything that you know in the political, everything that your party is saying. You want to write everything. No, what time? Do you get it? In the second question, why you for crana? What you are minimize how we trauma. Okay, man, more stories will be and answer stories. Hey.
So another question. So with the issue of the spouse thing, are you to write everything from SSFI to A to substance? You have to write everything.
But you're writing now. The question you listen to does that apply? Okay, John James. Elijah, you walk now. There in Ghana, this law does not apply because NDC did this, NPP did that. A John, you want to So this is just a top up that I wanted to add to what we discussed and our permanent establishment. So those who were not here, we just talked about permanent establishment as a non-resident entity having a relationship or transacting businesses in Ghana or business in Ghana. Okay. And we had one leg where Ghanaians also decided to trade or do businesses outside Ghana. Okay, so we said that you can be in Ghana and be trading outside Ghana. When you are in Ghana and you are trading outside Ghana, that is what we call the foreign permanent establishment. But when you are outside, so when you are outside and you want to do business in Ghana, okay, without establishing a company, you want to do business, you want your activities to be done in Ghana for you. That is what we said is called what? Ghanaian permanent establishments. Okay, and we said that the tax implication for foreign permanent establishment, a Ghanaian who is doing business in Nigeria, South Africa, Iraq, Iran, Afghanistan, Israel. Yours is foreign permanent establishment. Because you are doing business there, we don't have powers over them. Okay, so you will be activities that you engage in will be taxed in that foreign country. Do you understand? Now we said that when you are there for 183 days, the first 183 days we will do what? We will tax you. Do you get it? After the 183 days, we cannot tax you. So do you understand? We mentioned this. And then we said that if you are in Ghana, if you are a foreigner and you are doing business in Ghana, where we term as what? The Ghanaian permanent establishment, what do? We will tax you at our normal CIT, okay, which is at the rate of what? 25%. And then we also tax you the branch profit tax of what? 8%. This is how it works.
So what do you branch?
Which is it?
It's the name is which branch.
Permanent establishment, the basis is for here is a non-resident. Okay, so we first describe or explain the permanent establishment, and we realize that it is at a place where that is at the disposal of the non-resident, where the non-resident is doing business, where there's installation of equipment, where there's construction of more than 90 days, where there's supervisory activities ongoing. We use all these ones to describe the activities that the non-residents would engage in or would perform, so that we can classify that activity as well as a permanent establishment. After getting that, we are saying that he should pay his accounts and declare his profits. When he gets the profits, then we tax it at 25%. Then after the 25%, whatever will be left will be taxed at the 8%. And we also mentioned that they need to have some amount of what do you call it? A quota of the Ghanaian citizens as part of what? Their businesses. And we said it's about how many people? 20 people. Okay, you need to have 20 Ghanaians in your businesses. Okay, so all these things are part of the requirement and the tax implication. So if you go to exams and they mention an entity that wants to come as a PE, as a Ghanaian permanent establishment, you should know the circumstances that surrounds this. So any international it is training now, so that when you go, you are able to produce what you have learned for them. Okay. In the examination, they will give you the scenario. Okay. In the examination, they will give you a scenario. The scenario should give you or should tell you that this is a Ghanaian permanent establishment. So in that scenario, what are you looking at? First and foremost, you are looking at what? A non-resident. In that statement, that note that they will give you, that question, normally they will give you a question, a preamble. In that preamble, you should be able to identify the non-residents in that. Okay, do you understand? When you identify the non-resident per permanent establishment, why is simple. Then you come, that non-resident is doing business in Ghana. Once the non-resident is doing business in Ghana, you know that it will be taxed at what? 25%, and at the end of the profit tax of 8%. Okay. So all you need to do is to consider, okay, what is he doing? The activities, the business income. You identify or determine their profits, and then be able to slash this 25% on it. permanent establishment or Edina. Martis, permanent establishment or Edina. Rita, Martin and Rita. Rosie, you are Edina. You know Edina. But you don't yet. Okay. You see, in the exam, you don't need to be thinking far away. You just need to know what will trigger your solution. Okay, what will call for your solution. It's notes now, you see, in the exam, they will give you a lot of things. Okay, your ability to identify how each of them relates. That is all. Which one?
Both of them.
Both of which one?
The permanent establishment and the minimum requirement to do business.
The minimum requirement is more under GIPC. And my catch on the GIPC, why then did we feel why then? Why say Obi call graduation in India, might you our commission? Because
how did you see? You saw me. You didn't call me.
Why should I call you? When you have a class and you are there.
Oh, sir.
They will give GIPC, they will give them time to come and do what? Talk about their activities. Okay. Definitely they will come. They will come and talk about what GIPC is, their activities. The reason is that when the China can go over, no, I catch one can be no way business. No, after baby, I catch a no, or on you scanning, on oil one finances and one. Then that person, that will be you, is not having knowledge in our tax system. Okay, into almost on to remember out in a mamba cadet, oh, here is a business while GRF one day. Do you get it? It's all my China from open or cash away business. I work for one would obey business, the man will get taxed. Okay, so as we are coming out, they draw our attention to the fact that any foreigner that is coming to do business, you should know the tax implications. Okay, and it is a source of revenue to the government. As a new accountant or as an accountant, you should have knowledge in that. It's on the GIPC, then question can come before others. Okay, so let's put this one to an end, and then let's look at tax planning. We discussed tax planning.
Before tax planning, and this would tax again the difference between doing business in Ghana and with Ghana.
Pius, you were here when I was explaining that. What is that? Top down. Doing business in Ghana and with Ghana. Hello. This question, I told you that this is a bonus question. It's a bonus question that IC normally gives to students. So if you confuse yourself and you go and this bonus question comes and you are able to answer, what will you? Because it has less correlation with tax. Doing business in Ghana and with Ghana. In Ghana, but the only difference is this weight and beef. It is a policy that my explainer, but one of the Asian is a utility can be a Russian Kama, who be Kano Sunkai. Cases.
Do business in Ghana, it's more or less like the Ghanaian permanent establishment. Now, when the person comes and then that's its activities, business activities in the country. But with Ghana, now when the person comes, buy and then take the stuff he buys away and then go and take elsewhere.
Okay, so basically that is that. Matthew, you are doing business in Ghana. It means that you come in the morning and you open your office. Then we come here and we buy. Okay. You give us the items, then we go. Okay. You also go to Accra and then pick the items. You bring the items here and then you do it. You come and sell. You open your office and then you come and buy. That is doing business in Ghana. You are doing, your activities are in Ghana. You are generating your income in Ghana. Okay. But with Ghana, it means that you don't have any bearing with Ghana. It's like you go there, you buy your items, and then they give you receipts. You take your receipts, and then that is all. You can decide to come again. You can decide not to come again. Okay. In the morning, when we wake up and we are looking for you, you can decide not to talk to us. You can decide not to do anything. You don't have any relationship with us again. Do you get it? That is with Ghana. But in Ghana, whether you like it or not, you have to open your office. Whether you like it or not, we have tax officers will have to come and then meet you. Do you get the scenario? We are saying that Ghana trades with China. How about you put the other China?
Price.
I am
Cool.
that one box size. Yes. Do you get it? So we are trading with Ghana, with China. Sorry, we are trading with China. Okay. So China comes and then they buy our bauxite and then away. Adicha. After the we China phone office, I want on bauxite over there. Bibi won't be one. Then you want to use the guy you build. So so no work at Ghana, you to bauxite to be a case die. I'm also don't see because knows I actually. Bauxite no into we are into them economy. Okay, that is trading with. It means that you are trading with a country. Okay, you have no bearing with them after the transaction, or in this case, it is a continuous trading. Okay, they buy our item. There is no tax implication in Ghana. Okay. When you are trading with Ghana, you have no tax implication in the country. You buy your things and then you go. That is all. But you'll be at what I do, Alibaba. Yeah, Alibaba. Oh no, one was what about Amazon and eBay. Alibaba or China. And after I do Alibaba, we are, and you are some you are. I was something more. Do you get it? And you only have some bill. So you trade with them. You are trading in. It means that ever China or a from Guangzhou, never Shanghai, now what time. But you see, I'm asking now. Matthew, Mark, and James. We are may explain our money. And the high graduation as it. But you know, a bonus question. But please read and solve the various questions. Let us go to tax planning. Tax planning. Legend now and our message now. It's in there. God willing, in tax planning issues in this is our hand. So look at seminar we are. They miss a question. Question maybe will be side. I will do this. Paul, I will do this question first. If it's a question we are or the whole class, maybe we are. So tax planning. What do you know about tax planning?
The little I know, I'll share. Okay, so tax planning is a kind of an arrangement so that you arrange your returns in a way to save some taxes for yourself. And we learned that we have the late variables, late implying the L is for location. So depending on where you are located, you are bound to make some savings. For instance, if you know that when you are sited in Accra and to worry you, you know the various percentages are when you go to the regional capitals or those who are beyond the regional capitals, what's the percentage that they attract. Then you go and site your business there so that you enjoy some level of savings. And we have the activity variable. That's also borders on what you are into. Are you into petroleum or mining or other sectors? And that one too. You are bound to make some savings there because you know, depending on the activity that you are pursuing, the tax rates are charged accordingly. We also have the T for time, the time variable. Then we have the entity variable. That's be it a corporate entity or a partnership or a sole proprietorship. You know, if you are a corporate entity, and depending on the sector you are, okay, the normal CIT rate is 25%, but at times it varies depending on the type of business you have established. So thank you.
Why can we now? So we discussed about this. We call them what? What
We said late variables.
Late variables. Yeah, don't look at. Late variables. Rita, I have it. Samson's have it. Variable. Variables for tax planning. Variables of tax planning.
Or maxims.
Or maxims. Okay. Or maxims. Maxims of tax planning. Okay. So we said that the tax planning is simple. You are planning your tax. Why would a person or an entity plan his or her tax? We give some objectives that we need to plan our taxes. And then we say that the tax planning dwells on this platform called what? LEAD. Okay. So in examination, as soon as you remember LEAD, then you should be able to provide the answer. And we said that LATE is just an acronym for location, activity, time, and what? So location. Then we have activity. Then we have time. And then we have in tax planning, do not be late. Make sure you are never late. I am putting this acronym in your head. Don't be late. But in case you go and you see that the late has been changed and there is J here, don't be confused. Man, can say a chain advantages one chain merits. G now that's a jurisdiction. Jurisdiction. The jurisdiction is all about what? The location. And the location we said that you can be given a question where you will be asked to give the tax incentive of citing a business at a particular geographical locations. And then we cited examples of entities and the locations that you can enjoy. Another one. Example, written.
Establishing a business in the regional.
And that will be at what percentage of tax?
Say the given lesser tax rate of 25%. So we can say
18.75.
You know, calculating. Top down on your hand.
18.75.
18.75. Okay. And then what again?
And outside there is regional capital.
12.5. Okay, so we have 25%. So, yeah, clear in once and for all. We have 25%.
18.75.
18.75%.
12.5.
12.5%.
15.
But you're 15. Into what you say, you want to for on some and this one relates to a particular industry. What industry is that? Manufacturing. Okay, so this one relates to Accra and Tema, where the resources are available, where infrastructure is already available. We have an industrial hub set for businesses there. Then we have this one as well, regional capitals. Okay, and this one is what? Other than what? They are above. Okay, those that are outside the regional capitals. Why I have a question I'm going to some will solve mine. I don't know what you mean. Okay, so that is how this one goes. So if it's our location, this is the example that you can look at. And please, when you are learning, learn with the examples. Learn with the examples. Because in the exam, on your theory exam, in the exam, they will go and create a company that is never existing. Actually, you know, maybe an currency over AMP. Do you get it? Scenario over, you may not have heard it anywhere before, not even at lectures. Okay, so learn the examples because so for them, your scenario now whatever, they will bring these examples that are in the practice notes, the examples that we know already. They will chip in those ones there. Now, on any trick about tax exam, that's the only trick. We can say, but you are only looking at things that you have learned, things that you know. Okay, that is why I always tell you that make sure that you know the examples. So in this case that we have mentioned the regional capital, please, regional capital 102. But may I expect the regional capital to Accra. They will give you a suburb that is under Accra, and they will tell you that it is under Accra. What is that? For instance, Takrady, no, Accra, if you come, if you come under Takrady. The man if you man putting as a standalone. And then if you don't know what him and if you don't know our classmates they have given the clue there. What I'm saying is that question okay, so they will give you a suburb that is close to the temporary. Do you get it? And that they will reference it towards the temporary. So don't take the figure as a standalone. Secondly, Takrady Metropolitan is including the Figuma. Etasa. In the Yaka, secondly, Takrady, if you come. But in your work at a bench, what a bench. Bench or Enfa or Western region or Takrady. Or estimate in America, do not take these ones as stand alone.
Say, no, say them neck has that. No, Benz, no say about apply 4.5%. Not if you come apply 18.
If you come here, apply 18 because if you come is reference to Japan. If you make sure that I think I'm better the mass and by the day. I've met one before, who did the same question. It's not really children. I'm also maybe some. I'm kind of a kind of say you. I'm kind of a kind of question. First, I'm going to cry. One came close. Do you get it? Those ones are common or easily identified and associated with either regional capital or what? Accra. But in the CCR, one can show there, Takrady straight away, and one can show there Accra straight away. In the way, I catch it, if you are catchable, Suhum. Emma, I catch it with Suhum. Instead of you taking Suhum as the suburb, I see a question. I will leave you Ghana. I see where you go, Liberia. Do you know that? Yes. Aha. In the sector, Suhuma or a Himfa. Question Nankasa. Or more clue there. Suhumu or ye or Suhumu or Accra. And now Suhumu or Oforudia.
Say, there, show. I share a or Western Eastern region. Eastern region. No one new classes. What I mean. Rates now.
No, rates in America shortly. My country. Takrady. But what Takrady is regional capital, that is what? 18.5%. 18.75. But what can a Takrady straighter? What can easy? Any easy. It's over what within two. What for if you come in Takrady? But if you come in Takrady, don't take this one. If you come as a standalone, then get it up. No, if you come or other than other outside the capital. You want? Then and come for 12.5 for farm.
You are 18.75. Say 18.75. Oh no, that's there. Why you know?
On the walk,
I'm not sure I want to. If you come as stand alone, release. If you come what? Regional capital by capital.
Yeah.
So how do you tell us?
What do you tell us now?
No,
Yeah,
you
they
don't.
can't
I'm not
percent.
ready to say that.
It's in a year point.
No, I'll catch them a year.
So 18.75.
18.75.
Yes.
Yes. It is said.
So what I said now?
Oh, yes, that's so cry. Actually.
The reason is that Obi Sam, do you get it? Close to last sitting exam, no be from, no be Sam. I think a day or two, no be Sam one person. I don't know where I went then. Man, call them for a few women, but then a few women, I stand alone. In fact, 12.5 but mistakes now, no one, no draw attention. Now, say, compare them, same mistake.
Say, we find that Sumi Eric. Now, what are they? Sumi in Koforibia. Since I am Koforibia, I don't put things, so they am an 18 point. It is a way na maza. Say Koforibia na maza. Yeah, pass 12 points.
Sir, we state not in the person, we state Sumu in the eastern region. Then it will go to 12.5. So if it is any other person of the capital, regional capital area, he will stay in the region.
Yeah.
But regional, if it's going to be the regional capital area, we mention regional capital area attached to whatever name that is.
Very clear.
Apparently, this class understands it more than the person who asked that question. I think that's better. Rose, okay. Okay, so that is, you see, they gave your 50% is under where they mentioned Northern region, Northern Savannah, and other regions. That is under young entrepreneur. That's young entrepreneur. Thank you. Is it young entrepreneur? Which one is the one word? Okay, yes, that's young entrepreneur. Okay. So when you are 35, when we are a youth up to 35 years of age, and you engage in certain activities as a young entrepreneur, that 35 years is considered as a young entrepreneur, and you engage in manufacturing, you engage in horticulture, you engage in is it energy? You are engaged in energy production. That is where you are giving that concession. But so what in the corner of young entrepreneurship? I'm trying to get.
Regardless of the region.
Demarcation in Ghana, and it is based on the 10 regions. But one revising. See. Concession, it's under concession. Okay, you need all these ones for tax planning. You see, say rules will be said. I'm going to find 2 million kind of mass.
Okay. So the income of young entrepreneurs from the business of manufacturing, information technology and communication, waste processing, tourism and creative arts, horticulture and medicinal plants are exempted from tax for first 5 years. And beyond these tax holidays, honor rules na some or share. Indeed, also a habit. So you will have that one, you will have Accra and Chema. And then you have other regional capitals outside the three northern regions. So other regional capitals outside three northern regions. So this one will give you 15%. This one will give you 12.5%. And then we have outside other regional capitals. This outside number 12. Outside other regional capitals. That one is 10%. Then the last one is 5%. That is the three northern regions. Them three northern regions are excluding one. Yes. Yes, in Portugal. Yeah, for 16 regions. Amendments be and they use they maintain the okay. Obviously, when a person is supposed to come, it will give you the description and you know how to apply it. Those are your 16 regional. That is why I am finding it difficult to talk about it. But it's also there. Because what is 16 regions bearing? It's a new tax law, you know, or apply. Taxes move so low when you mine on pay. Generally, for that, and it will calculate a PAY power mistake. Then we have the three northern regions at what? 5%. So you should know two things: the industry and the rates when it comes to non-entrepreneurship. The industry and the rates. This is how one about okay. So you need these ones. Tax planning. Very simple. Tax planning. Very simple. After knowing the margins, the rest is to be able to identify the incentives that relate to a particular industry. Okay. Then after that, you should also know the treatment of specific items or specific transactions in the tax law. For instance, we have talked about repairs and improvement, research and development, those ones, financial costs, loans, think capitalization, which I said I'm sure that think capitalization, mergers, amalgamation and what? Reorganization, acquisition of shares, change in shares. When there's change in shares, tax plan at night simple. That's why I did in honor the same. That's why I did in honor the same. And I'm different. I did the same. Just the people buy carry the guy. So let me go through this person to him, and then we'll discuss it and quickly close.
James.
So I have put this one to index. So first and foremost, let's see if we can discard the first person, and then we'll go and do the rest. It's just 2 questions. Pius. Paul. Massa, I'm going to say, remember the thing I was saying now.
Hey, consult with us. The place sheets in the
What is the tax implication of changing shares? Paul. Changing shares. What is the tax implication? Excellent. I'm going to show you. Change the shares. Change the shares. Change the shares. Change the shares. When change the shares. When the company's share structure changes, what is the tax implication? Question number 2. Read the essay. Okay. Top one answer. Ultra.
So I knew that there will be a tax on additional shares applied at the rate of 0.5%. And the dividends received from those shares will be subject to tax of 8%.
Will be subject to tax at what?
8%.
At 8%. Okay. And who else? Contribution cassette.
So please explain again.
When a company's or an entity's share structure changes more than 50% within 3 years, it constitutes realization. This means that the entity will have to consider the cost of the shares and the consideration to determine any gain or loss on the realization. That's what I asked. Charlie, not us. These things you go in the exam and then just one line item. Now you can fill. What the number of shareholders of an entity? What the number of shareholders of an entity shares changes? This one we are looking at the number shareholders, our shares in the company. Number of shareholders. What did I say the other time? Taxation of shareholders. How do we tax shareholders? That's one. What about the number? The number. We say that we call something closed company. Closed company. When the number of shares, closed company. When the number of shareholders is up to 5. So up to 5 means that maximum number is 5. 5 shareholders. This is what we call closed company.
So, what I say?
What I say?
What I say?
I'm saying that company shareholders were up to 5. When they are more than 5, they are no more a closed company. Now, closed company, which is up to 5, the law is saying that if you have a closed company and the entity fails to declare dividend, for a continuous number of years, the Commissioner General will decide or will set aside portion of their profits and declare it as what? Dividend. The Commissioner General will set aside portion of their profits and declare it as well dividend. And therefore we hold the dividend tax of what? 8%. Why was that tax? Paintsiwaa.
I'm not Venice.
Taxation of shareholders. Every sitting they will bring something small like this. Every sitting they will bring something small. So talking about dividend, we are saying that dividend is subject to tax at 8%. Fine. But a dividend from a resident entity to a resident person is what? Yeah. It's what? It's exempt from tax. Hey.
Dividends from
Yes, it's a number of tax list.
tell you, the only tax set in our
Yes.
age of
Sir, so if that's the case, then 8% is no one or apply to. On residence company.
yes. So that's what I wanted you to do. So it's exempt from tax when there is an underlying ownership of what? More than 25%. By the investor. Yes, the resident person. It rules or shares or Ghana Commercial Bank or shares or ISU, Ekunfi Juice Company Limited. So the shares that Rose is having in Ekunfi, if it is more than 25%, we are saying that it is what? It is exempt from tax. I'm saying now, I don't want you to hold. Or 25. 25.
20% there on our budget.
It is to encourage local investments. But I know sure. Stand will be
Same Porto. It's I say instance where maybe to Rose will shares were limited. No sense go Ekunfi. To me find there shares were limited. I had a record. No sense to be what Ekunfi juice.
So I'm just using the friend.
Yeah.
Not necessarily.
But then maybe said so in case maybe more so maybe 12%, maybe a more Ekunfi no
Is
yeah.
not allowed. Consolidation is not allowed. So American what has companies or shares of company A, company B, company A or 12%, company B or 13%. Often two family no exempt. Now this is then starting with the user or a new. It's important to one family. Now, in the first question, dividend received from shares owned in Toyota Limited in Japan. What do we do? Question number 2 page. So this is also about dividend. Have you seen that? Yes. Yes.
Double tax. If we have a double tax, use a credit. That's the tax rate.
What in it here?
Who's that?
Pastor.
Oh yeah, chicks. That's like I look at. Oh yeah, chicks. More, I think
Hey, Deacon.
Dividend from Toyota Limited in Japan. What is the tax implication? Yes. Masa, hey, the man you want to eat this. What the book book and getting what I had. What I book. May I never come I don't be I issue. This small, I using how small the statement is. Ever question. No, I'll write a whole story about it. The underlying thing is that the dividend is coming from what? A foreign source. Into on what will be the tax treatment?
8%.
Let's say 8%. Okay. James, you just did. 8%. Paintsiwaa.
That's a question.
Matthew, I want to go graduation.
I graduate in
Okay, rehearsals.
Pre-graduation ceremony. How will the treatment be? Dividend from Japan. So I mentioned that we have what is called a global income or worldwide income. So if you receive income from a foreign source, it will lose its identity as it enters the Ghanaian tax jurisdiction. Do you understand? That means that when you bring that dividend, you should add the whole dividend amount, including whether you have paid tax there or not, okay, to your income, and then we determine your what? Your tax liability. If it happened that you have paid tax on that dividend in the foreign country, okay, we can consider and say that there is a DTA, double taxation agreement, and use the credit method to give you a relief. Hello. Nonetheless, if you go and then they don't mention that Ghana has a treaty or a double taxation agreement with that country, if the person or the entity has paid tax on it, it is still a credit to the entity or the person. So as to determine the tax liability, you less that portion of tax that you paid as well as tax. Rosie. Okay. And I can see.
So it's in case established that there is no peace.
There is no truth. Still, we will give the person as a relief or a tax credit. But we have as well. Say income no or then now not paying 10,000. Then 10,000. We treat tax 2,000. Actually, what can you say? 8,000. So the back. Yeah, I'm sure there's a rich and now we trade. Yeah, the 8,000 no 2,000. Then the 10,000 now. Yeah, can income out one end in the country. Yeah, actually, at the end of the day, the capital 25% and the tax there. You calculate them 25% tax in the year. Them 2,000 now, you has tax on or credit to the person. They are actually doing tax liability. You are putting some message here. Because every 8,000 income, it is possible that 25% of 8,000 will be lesser than 25% of 10,000.
Say it was not
It was not 2,000. Please, are we okay? Yeah, I know.
Higher true.
Because tax planning entails a lot. Tax planning. The easiest question under tax planning is to ask you about the maxims of tax planning. That is the easiest question. The rest, they will give you these small items. Just understand. Okay, what again? So now everything about dividend. Maybe some more questions because I can remember this. Everything about dividend. So your local company will treat you. So your foreign company will treat you. I can remember this. And I didn't. Second one is
The number of shareholders investment to now activist shares. On the being closed
closed company where the number of shareholders is 5. The question will be so. Question will be our shareholders are way less than 5. That's a question will be our shareholders are way less than 5. You will be saying
so less than 5 was I start
on your friend deemed dividend. Okay.
Less than 5.
Yes. Deemed the one tax deemed dividend tax. Okay, or deemed dividend. Why 10 or 5?
See, Charlie.
Why 5 from closed company? So a 10, so a 5 on commission general will decide. So a closed company on commission general will decide. There, I may mark some of the member on there. The move of you won't push with this or them on dividend. But I was saying dividend. Please do you understand? Commission general Nankasam who profits name here for a year. Nankasa about to do that work there. Match room there area 10%, 20%. Okay. Of course, the Commissioner General will not do that in isolation. The Commissioner General will discuss with the management of the company. The Commissioner General will have to consider the strategy of the business. Okay, the operations of the business. Do you have any idea of setting aside some revenue or some profit for expansion? Okay, so the Commissioner General will discuss all these things with your management, and then they will set aside as what a portion of your profit as dividend. Uninsured dividend or rate your shareholders more because we are in big clear. Okay, it is for tax purposes. Most mobile able to be taxing because in set up business name kade. Shareholders in a coy over, a coy over, a coy over, a coy over, and a coy over. It's anyone's known a can't mess the old. A family company to them that you share dividend, one hour to them that on a day, woman, invest in financial business, name a business on Kobo. And I kind of work on the way from your way to there. Okay, if it's fair and fishing. Now this can dash in the in some manner in dividend tax. What you have said. Open in dividend tax. It's in dividend tax. Commission General Ocean was say, why the new company won't trade dividend? Do you get it? Then they will go to the books. Okay, but in your profit. But when the end declare dividend, say dividend, we share with us in over to lay. We want dividend like this, and in the share with us, or you will be any money. Okay, into any kind of tax, into them like into your tax. Sorry, into your dividend. No, it's one tax. One tax. Every year there are what tax. Every year there are what tax. But Commission General did on them on tax. Because how that goes company on new answer. Please, do we get a picture? So the Commission General will come in and say that, let me put aside a portion of your profit as what? Dividend. And I'm saying that Commission General will not wake up and say that I'm taking 10%, 20% of your profit as dividend. No. The Commission General will discuss with your management. They will tell your management that what is your business strategy? Do you have any intention of expansion? Okay. Do you want to make some provisions for some reserves? Do you want to, okay, so you have to do that with the management, and then now you deduct that portion as well as dividend, and then it will be taxed so that you can pay withholding tax on that dividend to the Commissioner General. Please, I hope share with us and something ways.
Say, say, we are more than 5 now, no so
If they are more than 5, then they are beyond this. They don't fall in this close company. They don't fall in this close company. And if they don't fall in this close company, then you cannot apply this dividend principle to them. Please, do you understand?
You will charge them. You will charge them.
You charge money. Do you get it? So what can I declare profit? Into your own share.
The man.
Into your own share. One of them means Commission General the Brava day. I will estimate in your losses. Them that who revenue will be better. You but to be they are taxing at what? 5%. Please, do you understand this relationship that I'm going to? So a fall within the close company. Let's say declare dividend. Commission General on our powers not
to decide for you.
But some were more than 6. Them condition your Commission General ordinance of one of not it does not apply to you. But much that when you go scot free and
but why should we allow them to go scot free? Except 5 no is there a decider. Why are you
5 do you get it? It means that you can have that kind of relationship with the people that you have. It is possible. Okay. Internal Commission General will come and then look into your transactions, look into your books, look into your records. Okay. And apply this principle. Okay. But if it is more than 5, then this principle of setting aside, the Commission General cannot do that. Because the principle, the law is on closed company, which is a maximum of what? 5. So if you are 6, the Commission General want to finance and declare dividend, want to finance and fine on farm account.
So then, what then will we do to them?
Exactly. If you look at it, the Commission General the move of free. It's the principle of yet tax who revenue. You remember?
When you make losses.
Yes. Continuous
5 consecutive.
Yes. Okay. They will tax your revenue instead of your profits.
Okay.
Some profit may be declared dividend. But this time our loss need to make loss at any tax. Please, do we get all this understanding?
Yes, please.
And how you be?
Oh, just
digest.
Because we know then we be dividend. And to importation exam, the way dividend or owns. You need to understand everything about it. And I teach you. But you're looking at the next one.
So with the change in shares, that's the consider as realization.
Yes.
It's the difference between the consideration and
Cost.
correct.
They are told shares in 1 city. Net on 1 city, 50 pesos. And I'm going. It's a what your cost, which is the 1 city. And a consideration 1 city. Not 250. Difference in capital gain tax. What is the rate of capital gain tax? So a company, they work on income. Shall we answer them?
So I mean, there is statements now. There is them statements. 5 words now. And then an explanation.
So, one more change. It's a change. When I look at change in shares, maybe now can no more shares. Last one I can, which is the common one. I think rate I only can access 0.5%. 0.5% is whereby a increase in number of shares. Okay, with either your profits or your reserves. Okay. Whenever your share increases, whenever your share increases, you have to pay a stamp duty of 0.5% to the Registrar General. So in a question where there is transfer from retained earnings or reserves to increase share capital, it will call for the 0.5% stamp duty. That is the last thing about shares I want to know.
Some shares reduce the water.
What shares reduce are only what you change. And we said that the change will amount to what was the name?
Retained earnings or reserve.
Listen, when there's a transfer, whenever your share increases, it will call for 0.5% stamp duty, which is paid to the Registrar General. I'm not going to allow it. And I must say, it can be that increase, it can be a normal sale of shares, or it can be a transfer from your retained earnings to what? To your share capital, or from your reserves to your share capital. Come again? Yes, it can be a bonus issue. But bonus issue will not be found.
Share issue.
Bonus na the revolution.
Sir. But what we transfer from your reserves? What we transfer from your reserves to the bank? Apart from the 0.5. You declare dividend.
And I want to have dividend as well.
That one.
I want to have dividend.
You can say the glory. Come to this question and the
Yeah, we need
shares.
shares in the way increase. By any declare dividend as well. They want to have dividend. Increase the shares means at the end of the year, you will declare dividend. The dividend demand and some will affect shares now increasing. But dividend demand for to leave it as it is.
that you mentioned tax order.
That's one.
Then I could put in the best assassin.
James.
It's a stamp
The
duty.
meanwhile, bro.
Yes.
Meanwhile, bro. This was a member.
And sometimes they repeat, and I shall give
This
you
is a transfer from the reserve for capital.
Shares.
The way increase our capital.
anytime your share capital or stated capital increases, it calls for 0.5 stamp duties. Simple.
Nothing more.
Nothing more, nothing less.
Thank you, sir.
Wherever it is coming from, once it increases, you have to do what? Apply the 0.5% stamp duty. Mrs. Atata. It's paid to registrar general.
Registrar General, not Commissioner.
It will come to commissioner general, but it is the registrar general that takes the money.
Thank you.
The registrar general takes it on behalf of GRA. It will be related to GRA. So that one.
Said, Matt, I don't know what
Hey, James is very open.
Matt, the Scholar Assemblies, which is the Tamil Council Assembly, Jerry want to take over. Lisa, I think we see it in a mess.
Marco Martin leader. What's I mean? But I know they want to take over. Okay. It is a standard practice that the finance minister determines how the local government should keep their records in relation to their finances. So that one is a standard thing that is there. Okay. ECO, Income Tax Act or so the finance minister that tells them if they want to prepare budget, it's the finance minister that gives them the structure to follow. So that one is there. But what they were talking about is that the collection of the money, they want the collection of the money to go into GRA's account so that the account will be done by GRA. And then when they need some, they will go to GRA and then they will make allocations for them. Because assembly seems to be problem there. What is gonna why do market two? Market two, why then market two not GRA one and na market now that is the consolidation and other issues there.
Now, why do they want to take over?
The question is out one. It's a more exams. More exams. No.
Yeah.
Considering the fact that the HMC is close. But your shares and no some yata.
No.
When you have another assembly, the next one will be what? Lease arrangement. And lease is your account. And Pius, lease. What do you say about lease? Maybe some questions 4 and then anyone who comes. Let your 1 over 4 actually be more. 25% of the hand. Pius. Godwin. Lease arrangements. Rose, lease. Hey! And you know, Kai. Paul. Hey, Paul. Mrs. S. Minka lease are some of this.
I'm maybe mom didn't call it as some, but this year maybe me too, someone. But
Minka lease are some.
Since the it has to do with interest aspects of now these payments now supposed to it's finance aspects it's even as allowed and then the lease payments are take up to
No matter what kind of
Sɛ mpɔtɔ bɔne tɔfɛ. Bɔne tɔfɛ.
What we go share you? Into the message, say you can be the man. You write it on top of a book, or you underline it in your book, or I get them now. El flip book in the when you're around a cake. In that case, you start anymore. I'm not we said lease arrangement. We have, and the lease, we have two components. We have operating lease
And finance.
and what? Finance lease. For the operating lease, that one is simple. You go and then you hire or you lease equipment, and then you use it for your work. For instance, maybe you use projector and then you use a marker and everything. Then you go hire me and we realize none. Okay, the expenses that we incur on it, that we are using it on daily basis for our business. We are the interest get down. Marker here, equipment here on your so we pay. That is what the operating is. We will treat that money that we pay to the owner as what? Expense. Okay. It's a paper work and actual hire of equipment as what? Expense. Only operating. Okay. But finance lease has a tendency of ownership. Okay, it means that at the end of the period, ownership can be transferred to you. In the agreement, you stated that the lease payment that you will be making, okay, it will be about 90% of what? 90% of what? Of the value of the asset. Okay. Or the assets will be used about will take 75% of the asset's life. So you have leased the assets. The asset na use. Okay. Yes, you use them. Lease payments every year they put you. Every year they put you. Or about 90% of the cost of the assets. So about 90% of the cost of the asset. Not that asset in the later and I'm hello. Into Saddam Dano asset can be transferred to can change ownership. And now the ABR asset useful life. Okay. You own about 75% of the assets. Actually, the asset useful we used to move 75%. The asset is already 100 years old. I will use asset now for 75%, 75 years. General asset now, it will be spare part in you. So ownership can be transferred to you. But your assets are. Now, so you know what question now? Naturally, them asset now come only a finance was lease. Hello. So you know a finance lease, not actually. Finance leasing, there is a portion, okay, or you will treat the finance lease as a loan. I take a loan. After you score bank, okay, so when you score bank, scan our diamond with the two legs. One is the principal and one is what? The interest. Okay, the same thing. Assets now are packaging. One of the illusion kakran, James. You will consider them as what? As the loan, and that amount in the principal payment, the lease payment in the lease payment, will have two legs. It will have the principal portion and what? The interest portion. Do you understand? Now, say you have na you have taxes. Tax, interest, or you allowable, another on your allowable. I allowable that another. It is when you are preparing your income statement, profit before interest and tax, and then you subtract your interest. So this one becomes deductible. So this one becomes deductible. Okay, it's a you know some. It's a area 100,000 na local equity for the assets. Okay, every year we are 200,000 Ghana cedis. Every year we are equipment 200,000 Ghana cedis. Say 200,000 Ghana cedis. Hey, dear, in the interest, 100,000 interest no way. You find 20,000 Ghana cedis. You say a profit before interest and tax. About to them 20,000 Ghana cedis. It is 100,000 Ghana cedis. What's the principal here? The principal 80,000 Ghana cedis. So principal 80,000 Ghana cedis. And take this principal of 80,000 Ghana cedis. Okay, which is the actual cost of the asset that you are using. When you are because the asset is saying it's going to look at interest. Okay, 80,000 equipment I free. But on them they are free. And what you 80,000 plus 20,000. And the long section they say 20 interest or Adibiana on them get to free or free. If you have 80,000 on them the other part of assets means and I got the equipment. And I got the equipment. It is said I got the equipment now. For that equipment, add it to your pool of assets. Equipment you know about foreign. So manufacturing company now. What should be meant? But you have to see that. That 80,000 for one kaka pool. And they can pool at the end of the year, then you grant what is called capital allowance. It's full, be more of a fall. So a fall was 30%. Then you grant capital allowance of what? 30%.
Grant capital allowance at the rate of 30%.
Depending on where it will fall. It's what you are setting. So it's different from equipment. We can make possible in again computers 40%. But I see that. Hello. It is equipment again gensets and whatever you bought, then you add the 80,000 to your pool and then you grant your capital allowance. But I'll tell you as I said. Then I mentioned to the extent that it can be that you use it to acquire vehicle. And I'm catching on there. Vehicle, you want a cap of what? 75,000. It is a cap of 75,000 woman. Or then a cap at what? 75,000. That means that 80,000 will have capitalized and then look over pool. How much can you take it to your pool if it's a vehicle that is not for commercial purposes or that can carry up to 13 persons? What do you do? The value is what? 75,000. It's in echo pool instead of putting 80,000, you put 75,000.
The 75,000.
75,000. Yesterday, say, a car vehicle, capital allowance, say a car vehicle, that's a vehicle, no cost. Or
75%.
or 75,000. Okay, let me say it in this way. Say I buy vehicle. Now vehicle will take persons of up to 13. Now or not for commercial purposes. But it will be a business. Okay, for instance, after the pickup, and after the saloon car, I tell you, only phone cars, quick credit for cars. Jenny, any quick credit package more. But at a severe, it's a vehicle. It can take up to 13 persons, and the vehicle is not for commercial purposes. The maximum amount you can capitalize is what? 75,000 Ghana cedis. One of the principal or capital allowance. Okay, but yeah, lease payment. It's in you borrow number better. Not the Russia, only the explain now. It is sorry. If you are leasing a person or more equipment. There's no need to ever cap. But leasing even or a vehicle on a back. Hello.
Hi.
May I find show I do the leasing baby could be out there cap at 75,000. That means if you have a equipment machine be 100,000 on net principal portion on a back and after now I can't capital. Okay, but if you are your vehicle, whatever the vehicle, whatever, because of that limit, now is 75,000. It's a more work vehicle. No one will figure like 100,000.
Only 75,000.
Only
I have to
75,000. Edible capital pool, neither capital. Well, that's that. And so this is how the lease arrangement is done for tax purposes. Okay, and I went on to cite an example or give a question that if the equipment was bought on cash basis, which one would be beneficial to the company? To lease the equipment or to pay on cash or pay with instant cash? Which one would be beneficial? It's a one a tax plan in open. Those the matter. Tax plan in one you have to plan and tell your organization that okay, you have fiscal cash in control. Only they pay your own person. Another lease. Which one will be beneficial?
Please.
Hey, why don't we now police as some other accident? Means we how many leases? Why?
The interest is deductible because of that, to reduce their profit. And then if you buy with physical cash, you buy upfront, with that one, you are not going to enjoy that interest deductible.
Then
Menene ya dream, but apart from that, Obano, yeah, offended. I think it's the principle that you only consider, like more technical. You have the principle in
The interest.
yes. You said principle, no question. Yes, we could pull my charge a capital allowance, and I share we gain from there.
We do understand. And the cash at the contract. Once the cash at the contract.
Nine. Okay. So for education, for so 80,000. That's why like I look at food mass max. They charge for that. There's nothing like interest in that. Okay. There's nothing like interest in that. And say the ecology, ecolizia. Another ecolizility. One, assets. It is deemed that or your own, but I'm not. Then you are enjoying capital allowance on it.
Okay.
And I'm
Yes, I'll come with it.
you are enjoying capital allowance on it.
Yes.
You are also enjoying the interest afford as a deduction. So it is ideal that you advise your management to go in for the lease and to go for the cash basis, which is a popular question that usually comes in examination. First, number standalone person. CCRA students in water, city them Paintsiwaa water city. Why am 2 lines? No, I have a shit. Question you have to know how to deal with this. Say a location, but don't want to be so explain these arrangements. Them as say our show ya top down so on the on K. Say Charlie and rescue man, can watch my infra. Rate so I rate on the hey. Jim who says come on, I one was one to Wahada. Yes, for one now, my washing of yeah, true, you on it. Next question. Next question.
Cost of derivatives.
Cost of derivatives. I'm not going finance cost on that national insurance. I'm very much on that. You did the annual finance cost. Okay. You did the annual finance cost. If you have expense on derivatives, another cost of swaps. And you do that. Okay. Finance cost and but
So with the finance cost, in our normal treatments, we add back the one given in the question. Then we calculate the allowable one by it's the finance gain.
can it them
So basically the finance cost allowable is because the finance gain plus 50% of the adjusted surrender to get the allowable finance cost, which is the one that we deduct adding back the one the entity.
So what would I just tell you?
Adjustable income is the finance gain subtracted from the profits before tax. The profit before
So, I
tax
mean,
and,
also there too.
James, what man? Treatment of finance cost. See, you want to transfer my problem. Okay, then.
finance cost, they are saying that allowable finance cost is equal to finance gain plus for 50% of the adjusted profit or adjusted chargeable income. And we said that the adjusted chargeable income, this is our income. Message and the tax planning. I think they are tax planning. I imagine Paintsiwaa. Yeah, I think I think our tax planning say, hey, imagine Paintsiwaa. Yeah, I think this is not kind of work around the noise. But today, what catch up there, open with.
So, the years, you know, say, the calculation. I think so.
I didn't know you had a calculation, a man can do. A man can do better than my calculation.
So it's equal to
Allow finance cost or financial cost is equal to the financial gain plus 50% of adjusted chargeable income or profit, adjusted profit. Where the adjusted chargeable income is the income excluding what? Financial gain and what? Financial cost. The mass in the making. But my two man kind of mass. Top down on come also as mentioning in the class. Generally, if you say,
so is the income excluding financial gain and financial?
The next question is what? On due dates. I must tell you that also by area, every sitting they try to do something there. They will tell you that somebody was supposed to do something, the person did not do. What is the penalty? Okay, so in the tax law we have offenses and penalties. When you fail to submit your tax returns, what is the implication?
Fine. If you
fail to file
your return,
500 Ghana cedis. Okay, that's 500 penalty points. Sorry, currency points. Plus
every day it will be counting.
yes. So on the dot is 500 plus 10 cedis for each day of failure.
But say, don't you see that this thing is somewhere?
In some way, how?
You see, when you file, it doesn't actually mean that you have paid.
Yes.
So why is it that somebody who has filed is not attracting it and has not paid, is not attracting anything?
If you don't file on time, there is a penalty. If you file and you don't pay on time, there is a penalty. The two questions, the 43, what I wanted to use the 43 for the filing and leave the other, but unfortunately, 43 now have a shit. Payment in the period. So if you fail to file on time, that is the 500 Ghana cedis, and then it will be adding up 10 cedis per day. So if you have a person and they say the person is supposed to, the person's financial year ends in December or ends in September, ends in October, whichever month, and the person fails to file the returns, okay, that is when the calculation will start. So you count the number of days that the person has failed to file. So the first day is 500. Then the subsequent days you count and then you add 10 cities to it. Please, do you get it?
Yes, please.
And then when you file and you don't pay 2, that one is 125% of the statutory rate. 125% of statutory rate. It's also how many panels are every year? Tax na every year. Say in year, they calculate 125% of that tax. Na also higher. So when you go, you will have to read on this. See, every shower tax and every ways and means and anyway, a beat system. There's a beating and beating in a system beating that. No, there will be a beating day. One day is a beating. What's the atmosphere? So you will have, if you fail to pay, then there will be the, what do you call it, the penalty of 125% of the statutory rate, which is compounded on any amount that is what outstanding. On any amount that is outstanding. Now or Adima. We need to go through. I think this will be good. And under tax planning too, you should read under tax rebates, those exemptions and stuff. Okay, tax rebate, tax exemption, tax rebate. Read on practice notes, class ruling. Read on tax evasion, tax avoidance. Okay. Charlie, the man can enter here. We are being very serious. Please read on all these things. Then a one in our upper rate or a bonus.
Say it's about the ruling.
Class ruling.
Class.
One in our upper or a bonus or Manka tax ruling.
Never miss it.
Class
Already.
Class ruling. Class ruling. Okay. What is class ruling? Class ruling. Jenny. Class ruling. Hey. Matthew. And say if you are crabbing, and say. Class ruling. What is class ruling?
Ruling in class.
Class
We're talking about Matthew, one of Rosie, class ruling. James,
Class notes.
what's that? What
When there's a new tax, let's say tax code, and then a particular device generally to clarify how they are
how it will be applied to their transactions. Okay, so it's basically about
why they will seek advice from DRI.
exactly. So that is our class. Tell me, Obi or Biat, the last time that. Obi and you can't jump on to that. Obi at that. But in German, cutting. Once yes, sir. None of the folks here no party. So when a group try to seek clarification on how their transactions or specific aspects of the tax law apply to their transactions should be treated. That is the class rule. And then the practice notes is where the Commissioner General comes up with how the taxes are to be applied. It explains the technical application of the tax laws. Now, in the same way, we have the private rule. The private is when an entity, that one it is just one entity. Okay. That one entity will write to GRA for clarification. And that the Commissioner General will now explain how that transaction applies to the tax laws applies to that transaction. And when it happens like that, it is not transferable. Okay. And whatever is contained there is binding on what? On the entity.
So where it is not transferable means?
Where it is not transferable means that the clarification that you have sought cannot be applied to their transaction. It is your company that wrote. And Commissioner has given you specifically how you should treat it. Don't take your notes to somebody and say that when I wrote to Gina, this is what they told me, I can also do the same thing. If she doesn't understand, she should also write. But she has to see her.
By the group lawyer transferable.
The group, it applies to that group.
Okay. Transferable.
So Carpenters Association, if they write, it is for Carpenters Association. Baba is phone company. No, if I'm my Baba for the ones who won't apply. No. It's for that association. But you have to see that. So please read on those ones. These are bonus questions that count. Yes, you could change your syllabus. The possibility that you make a bonus question is high. It's important. So when you are reading, you read all those things. What will happen is that there are some small areas that borders on tax administration. All these things that we are talking about is tax administration. Okay, and we need those ones to assist you in your tax plan. So when you are reading, you read on all these things. Okay. You don't need to read much, but you need to read those aspects as well. Which of the questions is left? So the question 2, you go and then solve the question 2. And next lesson. What's your answer? But this weekend is going to be 3 years. As in how how we met last week. Come this weekend.
So,